So in this video we'll be learning about the disposal of non-current assets, right? So what do I mean by disposal? Disposal means that when the business decides that it does not require a non-current asset anymore in its business, right? It does not require the services from the use of that non-current asset in the business anymore. So either the business sells this asset at a lower price than its cost, right? Because of course after the use of that non-current asset from so many years, it is highly unlikely that the business can sell that non-current asset at a price higher than its cost, right? So either the business sells it at a price lower than its cost or at zero, that is scrapping the non-current asset and receiving nothing from it. So what happens at the time of disposal, that is what entries are required and how do we make the adjustments in the T accounts and in the financial statements, we'll be learning about that in this video. So let's first discuss few of the reasons for disposal. Why do businesses decide to get rid of the non-current asset? The reason could be that the asset is no longer productive in business. What do I mean by this? This means that the non-current asset is no longer performing according to the production requirements of the business. That is, it is no more producing at the full capacity that it used to be when it was new. Similarly, if that asset has been replaced by a more technologically advanced new non-current asset, so then also the business can decide to get rid of that asset in order to avail the benefits of saving costs, let's say saving energy and producing more in lesser time. And lastly, if that non-current asset has reached at the end of its useful life. So for instance, if you bought a non-current asset and it had a useful life of 10 years at that time. So now you are standing in the 10th year. What do you now have to do? Since that asset has become old, you have completely used up that non-current asset. So now this is the time to sell it now, that is to dispose it off. So now you might be wondering that what is to be done at the time of disposal of the non-current asset, right? What should be done? Because it is that asset that you are now disposing of whose cost you had been carrying down from so many years from the year of its purchase, right? And you had been depreciating it as well from the year of its purchase. So at the time of disposal, 4 things are to be done, right? 4 entries, 4 calculations, 4 adjustments are to be done in the accounts at the time of disposal of non-current assets, right? Let's first learn the logic behind these adjustments and then we'll move to the double entries, right? So first of all, you have to remove 2 things. Remove 2 things from your accounting records. First thing is the cost of the non-current asset, of course that non-current asset which is being disposed of right now. So that cost, the cost of that non-current asset is now to be removed from the non-current asset cost account. So for instance, you have 4 types of computers in your premises which you are using in your business. You decide to dispose of one of these computers. Now this computer had been purchased, let's say 15 years ago. So its cost is being recorded in the T account of computers from the past 15 years, right? If you are purchasing new asset, you remember we used to debit that entry, and then at the end of the year we used to balance the account by bringing down the balance carried down figure. So this computer which was purchased 15 years ago, so its cost is being carried down from so many years in the cost T account. So now you have to remove the cost of this non-current asset which is being disposed of from the cost account, from the non-current asset cost account. Why do I need to remove it now? Because the business will no longer be using this non-current asset in the business. So why should I keep carrying down the cost of that asset which I am no longer using? If I'll keep carrying down the cost, then this means that I have to charge depreciation on that as well. But no, since I am not using, I am not getting any benefits, so why charge an expense against that non-current asset? So first thing which you have to do is remove the cost of the asset which is being disposed of, right, from the cost account. Second thing, you also have to again remove, number 2, accumulated depreciation of that non-current asset which is being disposed of from the provision for depreciation account. We know that provision for depreciation account is a contra asset account, right? It is maintained against the non-current asset which shows a reduction in the value of non-current asset. Okay, so again, since this account also has a balance brought down and a balance carried down, So the accumulated depreciation being carried down as a balance brought down figure from the past 15 years, right? You had been calculating depreciation for every year till 15 years. This depreciation is there in the T account of provision for depreciation as an accumulated depreciation on this computer. So now this accumulated depreciation accumulated from the date of its purchase till now, till the last date for depreciation, should be removed from the provision for depreciation account. Why do I need to remove it? Because since I am removing the cost of the non-current asset, so I have to remove its depreciation as well. Otherwise, it will understate the value of my non-current assets in my statement of financial position. If the asset is not there in the business, why keep its accumulated depreciation in the accounts as well? If the asset is there in the business, then of course we have to calculate depreciation. We have to show its accumulated depreciation as a balance brought down figure as well. But now I am disposing of the non-current asset, so I have to remove its cost and its depreciation from the accounts as well, right? So two things we have to remove. How do we remove the cost and the accumulated depreciation? That we'll be learning about in just a minute. But first of all, you have to remove two things, cost and the accumulated depreciation, right? Then you have to record one thing. And what is that? You have to record the cash that you are receiving from the sale of that non-current asset. If you are receiving something from the sale, from the disposal of that non-current asset, for instance, the asset that you are now disposing of had a cost of $1,000, right? And the buyer says that I can only pay $100 against this old asset. So this is what? This is the cash received from the sale of this asset. This you also have to record. Whatever you are receiving from the sale of this non-current asset has to be recorded. So this is the third thing. This is the third entry. And lastly, we have to calculate something as well, and that is either there will be a profit or there will be a loss on this disposal of non-current asset. When is there a profit on the sale of a non-current asset? There can be a profit if you are selling that asset at a price higher than its net book value, right? So if the disposal proceeds, right, disposal proceeds, whatever you are receiving from the sale of that non-current asset. So if the disposal proceeds are greater than the net book value of that non-current asset, then there is a profit, right? And when can there be a loss? There can be a loss if the disposal proceeds from the sale of that non-current asset are less than its net book value, right? Net book value, cost less accumulated depreciation. So for instance, if the net book value of the non-current asset is $200, after the subtraction of the accumulated depreciation from the cost at the time of disposal, the net book value is $200. But the buyer says that I can only pay $150 against this non-current asset. So the disposal proceeds are lower than the net book value. At that time there will be a loss. But if, let's say, the disposal proceeds are $300 and the net book value of the non-current asset is $200, right? So you now are getting a price from the disposal which is higher than the net book value, then there will be a profit on such disposal. So quick recap, what you have to do: you have to remove the cost, you have to remove the accumulated depreciation, then you have to record the disposal proceeds from that sale of non-current asset, and lastly you have to calculate either there is a profit or there is a loss on the disposal. Okay, and where do we show the profit or loss on the disposal? In the income statement. Okay, now let's move towards the double entries. First thing was to remove the cost. So how do we remove the cost? We remove the cost by crediting the non-current asset cost account and debiting the disposal account. Okay, so this shows us that there is a separate account opened at the time of disposal, and the name of that account is disposal account. Whatever the non-current asset is, either if it's a machinery, fixtures and fittings, so fixtures and fittings disposal account, machinery disposal account, plant and equipment disposal account, etc., etc. So how do we remove the cost? It is very logical. When you are buying a non-current asset, we debit the non-current asset account. Now if I am selling a non-current asset, to remove its cost, I am crediting the non-current asset cost account. Okay, and against this entry I am debiting my disposal account. This value will be the cost, right? I am crediting my non-current asset account with the cost of the asset which is being disposed of right now, and its cost is being recorded in the disposal account as well. Basically, what goes in the disposal account is everything related to that non-current asset, its cost, its accumulated depreciation, its disposal proceeds, and if there is a profit or a loss on that disposal. All these 4 things become part of your disposal account. So, first entry, disposal account will be debited with the cost of the non-current asset. We are done with this thing. Now, second was to remove the accumulated depreciation. So, now just think, when we want to increase the balance of this contra asset, this provision for depreciation account, we used to credit it, right, which used to record the current year depreciation. Now, by eliminating the accumulated depreciation on that asset which is now being disposed of, the account balance, the provision for depreciation account balance will decrease. So, on which side of this T account should I reflect this? I will be now debiting my provision for depreciation account, right, with what value? With the accumulated depreciation being charged on the asset which is being disposed of right now. For instance, I have 6 types of fixtures, and I am disposing of 1 fixtures only. So, I will be calculating current year depreciation on these 6 fixtures if the policy is such, and I will be eliminating the accumulated depreciation of that fixture which I am now selling. So, I will be debiting my provision for depreciation account with the accumulated depreciation of this asset, and I will be crediting my disposal account as well with the accumulated depreciation charged throughout the life of this non-current asset. So, this is how we remove the cost, crediting the non-current asset account, and we remove the accumulated depreciation by debiting the provision for depreciation account. Since this is a contra asset account, so you can see that this account is being credited to remove the cost, and this account is being debited to remove the accumulated depreciation, again the opposite effect. Thirdly, we have to record the cash received or the disposal proceeds received from the sale of this non-current asset. So now this double entry is very simple. You have to debit the cash or bank with whatever amount you are receiving against the sale, and you will be crediting your disposal account as well. So far what is the situation in disposal account? Cost will be recorded on the debit side, accumulated depreciation is being recorded on the credit side, and thirdly, the disposal proceeds are also being recorded on the credit side. I will be showing the T account of disposal as well. Lastly, we have to calculate whether there is a profit or loss on disposal. So, if there is a loss on disposal, now again we know that all the expenses, all the losses are debited in the income statement. So, if you just know this, that the income statement will be debited if there is a loss, and this means that the disposal account will be credited. What do I mean by this? So, this means that the shortfall in the disposal account will be on the credit side. That is why the income statement or the loss figure will fall on the credit side of your disposal account. Which also means that you are selling this asset at a lower price than its net book value. So, the double entry to record a loss on disposal would be income statement will be debited as it's a loss, and your disposal account will be credited. Or if there is a profit, so the double entry would be now income statement will be credited and your disposal account will now be debited, which means that you are selling this asset at a price which is more than its net book value. So, in this case the income statement figure will fall on the debit side, which of course will be the balancing figure of this T account, right? Cost will be given to you, depreciation will be given to you, the disposal proceeds as well. You might not be given with the profit or loss on disposal, so that will be the balancing figure of this disposal account. So, keeping this in mind, let's prepare the disposal account. What have we learned so far? We know that first we have to remove the cost. What is the double entry to remove the cost? We credit the non-current asset cost account, right? This means that we debit the disposal account. So, disposal account will be debited with non-current asset cost amount, the value at which this asset was purchased, right? Then second thing which is removed is the accumulated depreciation, and this is removed by debiting provision for depreciation account. This means that we will be crediting our disposal account with the accumulated depreciation. Thirdly, we also record the disposal proceeds. So if it's in cash or it's in bank, that account will be debited. So cash or bank will be debited and disposal account will now be credited. Okay. Then lastly, if there is a loss on disposal, so the shortfall will be on the credit side. So here we will record the income statement figure, which is the loss. Or if there is a profit, so then it will fall on the debit side, right? And then we will just close this account. Since profit or loss will be the balancing figure for disposal T account, so then there will remain no further balance in the T account, and then we'll just close it off. So this is all about the concept of disposal of non-current assets, and this is very simple as well. If you just remember the logic behind the double entries, you can easily remember the double entries and how we make this T account of disposal, right? So that's it for this video. In the next video, we'll be solving some really good examples through which you will get a good understanding that how do we make the disposal account, how do we calculate the profit or loss, and how do we eliminate the cost, the provision for depreciation, the accumulated depreciation from the provision for depreciation account, right? So I'll see you in the next video.